Well, good evening, everyone. Well, thank everybody for being here tonight. I know you've got lots of places you could be, but thanks for spending a little bit of time with me and the rest of the gang here. Thanks, Malcolm. And you can see the charts too, correct? Okie dokie. Give me just 1 second. Turn the fan off so I don't get any background noise there. This left-hand cartoon here is people chasing Apple. Hello, Coach. Good evening. All right, here we go. We'll start off with disclaimer. Trading involves the risk of loss of capital. Make sure you know what you're doing. You've simulated all trading first, and know that nothing here is for more than educational purposes, and the opinions are not meant to be construed as financial advice or recommendations. And without further ado, let's get going. A little bit about me in case you're here for the first time. I'm an ex-US Air Force fighter pilot with master's degrees in both computers and business. I've been an active trader since '98. I've been a full-time trader since 2009. And Rick has been kind enough to allow me to be with him and the gang since then, and I've just enjoyed every minute of it. Technical trader, use limited fundamentals as well. We'll talk about that. I do moderate H&R candlesticks from time to time as required, primarily for fill-in. And I do provide a one-on mentoring if anyone is so inclined. I want everybody to stick around at the end of the presentation. I've got two offers there for you. And if you are not a member of either Hit and Run Candlesticks, Right Way Options, or have the LTA scanner, stick around. All right, the agenda tonight, we're going to have a little lesson of the week. It's going to be visualizing the trend. Then we'll go over the economic and earnings calendars, the market overview, a few trade ideas, Q&A. Not stock specifics, we'll start with that. And then we'll look at your stocks that you post out there. Please only one per person, not one at a time and come back a little bit later and post another and another and another. Just please make it one so that everybody has a chance, and we'll get going on that. All right, visualizing the trend. I'm going to start by showing you what my chart settings that I use. And I use moving averages, these 3, 8, and 17 exponential, to help me visualize the trend. Then I also use the 500, 200, and 100 SMAs to help judge when we might. Some of the other people that are out there use those, and we might have a pause or a reversal around that period of time. So I want to know when they are. And the last thing I want to point out there is right here down at the bottom, I use Stochastics RSI, and that's the oscillator that you see right there. And I find that as a very, very good tool that I use to help judge momentum. It's not the be-all, end-all, but it is used as a secondary indicator to help me judge entries, exits. But primaries, price, and pattern. Well, the moving averages, like I said, help be used to visualize the trend. Here's Corning from a few years ago, 2018. And you see from the 50 period movement and the 200 period moving averages that we've been in a longer term downtrend here. And you can see how primarily the blue and the light blue and the magenta lines, when they line up, we're in a solid downtrend. When they squeeze here, we're kind of in an inflection point where we could be changing, and then it went down into kind of parallel lines here where we're in a solid downtrend. Within that, we did get some rallies, but every one of those failed until we got a crossover here to the back, and this move up followed by the pullback and then a move up again. That signaled to me that we had a change in trend. Not how long it would be, but it was a change of trend no less. All right. All right, here's JetBlue. And you can see we're in an uptrend over here to the left. We're in a downtrend here. And then I showed where those reversion to the mean bounces were. And you can see how we reverted to the mean here up to about the 17 exponential and then pulled back. But I saw the indecision doji candle. Let me point that out. That little candle there, indecision doji. And the next candle down confirmed that we were going to probably do a reversal, and then we did, and we broke through this line here and went to a new low. Then we bounced yet again at about the 20th of the month, and then rolled back over again and set a new low. So now you can see how I used and can use my stochastics RSI to help judge that when this thing went up, we had the candle, we had price go down, we had the reversal candles, the three patterns up, doji, down, and then we had a crossover in the stochastics RSI to help us confirm the move lower. Here's my EMA only chart. Now I do have the 3 exponential on there. I normally would advise you don't really need to have that one on there, because I'm going to use the light blue and the magenta lines, the 8 and the 17, to help me judge when JetBlue was in a downtrend, when it was in an uptrend, when it's changing, or when it's in no man's land as it was over here to the left. I also like to use an area chart using a weekly time frame to get the big picture of where we are. That way I can see when we're coming to and these last 3 little spike up hills, the hills here, that we are getting close to the $23 level, and that's where we had run into highs in prior weeks. So by looking at that, I would be spring-loaded to say, you know, if I'm going to be long this and it's going to get up towards 23, I'm going to look for a potential reversal at or near that level. All right, if you want to know a little bit more about stochastics and stochastics RSI, I have a 1.5 hour course that you can find on Hit and Run Candlesticks that goes into great detail about sharpening your edge with the stochastics RSI. Goes into far more detail and examples that I've covered here tonight. And if you want to talk to me about it, you can fire me off a message to my email account. I'm going to post a little bit later, and you can see, I'll give you a little greater idea of what is contained in there. Let's go into the economic reports. Nothing really for Monday. We do have the Dallas Fed manufacturing survey at 10:30. I have no idea what is in the Southwest as far as manufacturing goes. I'm not sure it's a market mover, and the Econo Day folks kind of agree with a black dot. We do have PMI manufacturing numbers come out on Tuesday at 9:45, right after the market opens, and ISM at 10. Construction spending also at 10. So anywhere between 9:45 to 10 o'clock, we could expect potential market reversals. So if we're opening up and in an upward trading environment early in the morning, intraday, we could be watching for a potential reversal, or vice versa. If we were trading down, look for a reversal back up. Economic reports, motor vehicle sales will be reported throughout the day on Wednesday the 2nd. Each company reports theirs at different times. So if you're going to be in, say, a General Motors, Ford, or any kind of other motor vehicle or truck company, something related maybe even to auto parts, you need to probably be aware that that's going to come out, and it may drive the markets on Wednesday, the 2nd of September. We have ADP at 8:15, factory orders at 10, my beloved petroleum report at 10:30, and the beige book at 2. I am not so sure about the beige book anymore. I'm not sure it should be a green dot. It definitely shouldn't be a red dot. It should be even a black dot, which is less important. Anyway, moving on to Thursday, we have at 8:30, we have goods and services, jobless claims for the week, and productivity and costs, all out at 8:30. PMI at 9:45 and ISM at 10. And finally, the biggie that I've got starred here is the monthly jobs report on Friday, September 4th. So what do the different colors look for? Lauren, it has to do with Econoday trying to prioritize the importance of each. Let's let me. Oh. All right, Econoday. Let's go down here. What you got is the highest, or the market moving indicators, are red. Those that merit, quote, extra attention are in green. The black dot is others. And then they have consistency reports that you've got there. But primarily the three dots are red, most important, green, middle, and the little black dot is less important. That's where I grab my economic reports. You're absolutely welcome. Earnings Whispers has come up with, these kind of got out of whack a little bit here. Anyway, I don't know that I agree a lot with their choice of highly anticipated and most anticipated earnings. I've got it out here. I do agree with Broadcom and Signet on Thursday. Campbell Soup out there on Thursday. I missed that one. Brown-Forman, Macy's before the bell on Wednesday. They've got SAIC, which is a company I used to work for when I was still in the workforce there, and in Zoom after the close on Monday. But I like to create my own. What I do is I go out to briefing.com and look at their reports for the week, grab them, and I categorize them as before the open and after the close. So when you see my earnings report, you're going to see that I'll report the first line will be those that have reported after the close on the prior day, and those who had reported before the open the next day. So for Wednesday, I would have after the close on Tuesday and before the open on Wednesdays, and have them in two separate lines. One, so that I can monitor those after the close and know what happened, so I got a little bit of a head start. I don't have to look at all of the earnings before the market opens. So that's kind of how I have them. So that's how I've got here on after the close Tuesday, Home, Cal, H&R Block, and then the next line down would be before the open on Wednesday. And the ones in yellow have relatively high short interest, greater than 8% approximately. And those, if they have an earnings surprise, Kimberly, it is free. All you have to do is, though, you do have to register, and you could sign up, but they don't bother you with trying to sell you everything. They don't spam you with a gazillion emails. And if they did, I'd just block them anyway. So, and then you go over here to calendars, and then they've got a bunch of calendars. Now, the economic, I just go over to Econoday directly, and potentially you could look at things like their upgrades and downgrades. I'm having a little bit of trouble with loading that up. But anyway, I paid very little attention. Earnings is one of those that gets them going. Okay, so as you probably heard before, Kimberly, that earnings are potentially the catalyst for a reversal of trend and the beginning or end of a move. All right, let's go to the next one, market overview. So I'm going to come over here and I'm going to minimize this. You're welcome. That's why we're here. All right, I'm going to go over to the market, and I like to start with crude oil. Crude oil has been in a gradual increase for the last 6-7 months. We had kind of a V bottom here when it got down to 10, and we've been in a gradual climb as the economic activity in the world is picking up ever so slightly. And we basically filled the gap from the gap down on the 9th of March. So this one is just kind of grinding higher. There's no big moves that have been made. Gold was kind of flat, then had a huge run. July, to the end of July, I guess, till the first week of August. And then it did a nosedive and is basically, I guess I nosedive, I shouldn't say that. It had a reversion to the mean. So if we had take this, I'll draw a line here. If we just did a line there, we reverted back to a 30 degree or 20 degree incline. So we got too far away from that moving average, so to speak, the 50-ish. And then we took a tumble for a few days and reverted back to that and did a zigzag bounce, bounced to it again, and now we're resuming our trend up. And that's what happens if you get too far in a direction up or too far in a direction down, you will have a reversion to the mean at some point in time. We can't necessarily tell. What are the horizontal green bars? Are you talking about the vertical ones here, Johnny Mac? Or are you talking about these right here? These are greenish and red. Oh, the vertical ones. That's when we do our options rollovers. Futures rollovers. And this one right here goes from gold from 1 month to the next month. It tells me when we move. Let's go to the S&P. These roll out. Go to crude. You see, crude moves about once a month. You change to the front month basically every 30 days. For the futures, yeah, the other one's a volume profile, right? But he was asking what these are. These are when we get rollovers for the futures. When you get to the rollover, you could have some short-term volatility for a day or two either side. So I like to mark it down and be aware of the fact that there's going to be a rollover. Now, I don't hold futures overnight, so it really doesn't affect me that much. Now, let's go on over to the S&P 500. And you can see there was one when we did the futures rollover here back in June. Well, the next one's not going to be for 3 months. So the one before that was in March. So March, April, May, June. The June's going to be June, July, August. So it's September. So July, August, September, 3 more months. So we'll get a rollover somewhere about the first 10 to 15 days of the month of September. How does that affect us? Rollovers, if you're a futures trader, it could affect you, especially if you hold overnight. For most of us that are swing traders in stocks or whatever, it's not going to have much of an effect. All right. Let me zoom in a little bit here. We've started to stretch ourselves just a little bit here in the S&P, and my stochastics RSI is pegged at the top. So I'm looking for the possibility of us to have a little bit of a pullback. Nothing drastic and nothing I would ever consider going short yet, because I trade in the direction of the trend. I have only been trading longs since back here in June, 1st of July. As long as we stay in an uptrend like this, I am looking for longs. I am not looking for that many shorts. They've got to be a special case, an extra special case for me to go short. I do present ones that I think are possible shorts out there, but I will trade to the long side when we're in an uptrend like this. But this is telling me, be careful, Steve. We could get a bit of a pullback and do kind of a reversion to the mean, maybe to the 8 exponential, maybe to the middle, maybe down to the 17. But that's just an area. It's not an exact point. Yeah, Johnny, that's true. Although, look here. Oh, this is the Dow. The Dow got up, did a pullback. This is what I'm talking about, a reversion to the mean. It did a reversion because it's only 30 stocks, and then it resumed its uptrend. This is the similar thing that I'm going to be looking for from the S&P and from the NASDAQ. Well, the NASDAQ had a 3-day sell-off back here the first week, the end of the first week or so of August, and then we resumed our trend. I'll be looking for another one to come back and then probably continue higher again. The trend is the trend until it's no longer the trend. And, Russell kind of ran out of steam here a couple of 3 weeks ago. Did the pullback. What did it do? It reverted. It hit the 17 exponential and started to go back up. Now, is there anything magic about the 17? No, actually, because if I look at this line here of 1540, it came back to about the 1540 level. That just so happened to be where the 17 was. So I think it's coincidence that it's the 17, and it's more that this line over here back in June, the high over there was 1540. The pause, when we did the move up, we did a strong move up, sideways move, and then a breakout, that we would possibly come back to that area and retest, and we did. The fact that it happened to be at the 17, to me, was only coincidental. Now let's go look at the VIX. The VIX is stubbornly down there in the very low 20s. We did get a spike up a couple of days ago where some people saw a little bit of fear trying to come back into the markets, but we'll see how this transpires going forward. All right. In my trade ideas, I'm going to go back over to my charts, but I want to interrupt and go to TC2000 longs. And I want to go to TC2000 on the T2122. That's the month, 4-week new highs divided by the new lows. And that ratio is really a monthly highs to monthly lows. And what that does is that tells us when, if we get way oversold, that we're probably going to do a bounce. If we get down here, say below 20, and we've got the zero back in March, May, and July. Or if we get too overbought, a little bit too frothy, well, I call this the pullback zone. Well, we're approaching the pullback zone, but it just means to be aware of it. Doesn't mean that there's, oh my God, I've got to sell now. But I'm aware when we get up into this area that I might want to start taking some profits, or be aware that if I see a sign of weakness, I may want to take a little bit off the table, or I may want to exit entirely. All right, so we've got right now 86.88 is the ratio of new highs to new lows. It's 86% versus the rest. Okay, now let's go back to my charts here. Come on. Oh, I don't have it linked. There we go. All right. This reported earnings back here in the first part of August. did a huge gap up from 16 to $20. People said, this is too far, I can't take it. I'm going to wait for the pullback. I went, well, all you got for a pullback was to the closing high of the day of earnings. This is a perfect example of a 45-degree runner after earnings. Lots of them, especially if they had high short interest and had a little bit of a surprise. Boom, you can get the rally. And this one went from about 21 or 22, and even if you got in the second day, you could have done it, say 22 to 28. $6, over 22. What is that? Somewhere around 25, 30%. I think I'd take it. Okay. BERY Plastics. BERY did the same thing. Gap up, did a runner, did the pullback, possibly a little deeper than I'd want, but if I kind of eyeball it from 48, it went up to 55, and that 7, half of 7 is 3.5 off of, let's call it 54.50. That would make it 51, and it came back down to about a 50% retracement. These are all estimates, just ranges and areas. So this is probably a decent area. If it comes up and goes higher, we will probably go back up and retest this 54.30 to 54.50 area. But if you listen to my good friend Doug over at Right Way Options, he won't trade any of them that are below the red dots. Now this is the volatility stop dot. I make exceptions to those rules when I saw such a big move up here, gap up, and a 50% retracement. But if I see any weakness enough in it, the first sign of weakness, I'm out. It obviously is better to have it stay above the volatility stop, but it doesn't always do that. Here's the next one I have is, I want to say it's CRNC, CRNC, and it's kind of a big, huge move up on earnings, then a retracement, kind of a reversion to the mean, and then kind of a move up, zigzag, zigzag, and then it pulls back. So it's moved from, let's call it 42, it moved up, let's call it 58, 16, and 8 of that would be $50, and it came back to close to $50. So I'm looking for this one to resume the climb, and I also look at high volumes here. We did have high volume obviously on the earnings date, but I also saw some high volumes right up here near the $57 to $58 level. Correct. And high short interest I do in percentage. Now the let's go over here. There's a thing called shortsqueeze.com, and let's see, what were we looking at there on that one? CRNC. See how it had 15.57% of the float short there? That's percentage of float. I don't use short interest, that short ratio, because that's the old ways they used to measure it. I think back in the 1980s, 1990s. But we have more information now, and it's kind of evolved into using a percentage of the float. And to me, it's a lot easier to judge. Sure. You can get that off of short interest, shortsqueeze.com, or you can get it if you have a group of stocks, say reporting on one day. Put that in there, it filters it, and then go to ownership, and then sort by float, and it'll show you ones that are in high short interest. So there's a couple of ways to get it. Now, I will warn you, the data that we're getting is at least 2 weeks old, if not 4 to 6. So it is a little bit delayed. But before you run into earnings and you see something wobbling around like this, it's probably going to be fairly accurate. because there weren't a lot of huge days. Now, if you'd had a huge run up into earnings on this, which it did not have, there might have been a significant decrease in the high short interest. But in this case, I would say that it probably wasn't. Which said, as soon as we opened up and we got above this, say, $46 level, if I'd had it on my radar, which I did not, I would have been long, long, long. Now, I probably would have taken money off the table in one day, and then maybe on the second day take a little bit, and definitely by the time we did the retracement. Okie dokie smoky. Let's look on to the next one. CWK, Cushman and Wakefield. No idea what they do. Why I have this on the list is to watch for a break above 12 and a potential move to 12 and a half to say 13, 13 and a quarter. Now, will we potentially pull back because I look at my stochastics RSI? Possible, but we could just get a breakout and run straight up. What I think's probably going to happen, in my best guess, is that we might get a move up here to break above that. Then we'll get a retest of that breakout, go a little bit below it and shake out the weak hands, and then resume the climb. That's what I'm expecting for this one. So I've got this on a watch list, but it's not a watch list for Monday or Tuesday, but it's really for the next 3 to 5 days. And I constantly am churning and adding and subtracting from my watch list. Now, a lot of people say, oh, I don't want to touch an airline. We're in COVID problem. Well, we did a breakout here above the $30 level, went up to 31. We seem to have retested that 32 level. I'm going to watch it, see if it comes back. And again, see if it traces and comes back and retests the $31 to $30 level and curls back up. Why? Because over here with those right there, that high volume spike is going to get retested at 37 at some point. I can guarantee you. I don't know when it's going to be, but that's going to be retested. There were a lot of people coming over here, and that was not mom and pop. So there were people that were willing to pay $37 back here. Now, I have no idea what the news is, and I really don't care. But technically, I know that this area, 35 to 38, will be retested. And I'd like to be a party to that. Do you look at the monthly and weekly for confirmation? Remember what I showed in my presentation? Area charts? The answer is yes. Yeah, that's true. Let's okay, let me get back out of this. CWK, there probably won't be anything below about 20, maybe 30, or even $40. The options volume is probably not going to be that good, if at all. There are a few exceptions to that trade in the millions and multi-millions of shares. Okay, but then they're going to be really tight, which is fine, but you're not going to get huge moves. This is more for those out here, John, that don't want to trade options. Maybe they just want to trade stocks. So I'm trying to hit trade ideas that are a little bit for everyone. Hey, no. You're absolutely right, and that's cool. I will explain what I'm doing. Delta, that's what I'm doing. EB, another $11 stock, probably going to go up to 12 and a half. I can almost guarantee you the options here stink. But somebody wants to play a stock only purchase and whatever, it looks like a pretty good one to me. Flowserve's been on and off my list for a while. It did a nosedive after earnings, but recovered quite nicely. We have a reasonably high volume period over here, but I think we're probably going to go up and retest 32. Is this playing the wave theory? It's possible. The stochastic star RSI is not coming down from the bottom, so a break above 30.50, maybe it goes to 32 to 32 and a half. It may zigzag to get there. This could be a longer term option play for a month or so. It could be a stock play. It could be an intraday play. There are all of those. And the other thing is, Johnny Mags, is these $11 and $12 stocks could be day trade stocks. Something maybe with SVC could also be a day trade stock if it has a large enough move and decent volume. All of these are going to have at least 400. EBS decent flow for a small fry like me. Yeah, okay. FlowServe, FOSL. FOSL is going to come back up here and retest this $8 level. This may or may not have good options volume, but I can tell you that I wouldn't mind, with the stochastics RSI being this low and doing a breakout, $6, I could buy a few hundred shares and ride her up. Then I wouldn't have to worry about the options volatility or the like. HST, I think she's coming back up here to 12 and a quarter from about 11.75. Not very much in pure dollars. I don't know that the options will be worthwhile or not. It'll have to be your call. LKQ is trying to do a breakout. I'm going to go to the 9-month here. Whoops. Let me back out there. It just stuck. And we're probably heading for about 34-ish, where these high volumes, where the volume was, the high volume it wasn't, but as much as it was, that most of the volume here to the left was right there at about 34 at the beginning of the down move. And it's just kind of plowing a little bit higher. You may or may not be interested in it, but I want to point it out that it's looking to do a little mini breakout. Dave & Buster's play. Notice what happened back here. High volume of June the 5th. And then it pulled back. I have no idea what the news was there, but for that to get that much interest, that's institutions. They're going to drive that up. Now, the problem we've got here, it is earnings here. Do we want to try to see if we can get a couple of days up in earnings, or do we want to put it on our radar, and when the earnings come out on the 10th after the close, maybe on the 11th, we might, if we get a good setup and know that it's probably going to go up to 23. Yeah. You talk about Delta? You saying it looks like this part of Delta? It's possible. Anyway, I look at setups, and they're not setups to buy today. They may be a set to buy up this coming 7 days, 10 days, or what? Yeah. Thanks, Chris. Philip Van Heusen. Another stock that's at the breakout level here around 56 to 57, but it has earnings. Probably a little too tight for me, but I'll watch to see what happens. Why? Because they have this, not necessarily high volume, but a high dollar spike up here to about the $68 to $70 level. Does it want to go up there and retest it? I think it wants to really at least retest 64. So I'll look at it after earnings and see if it's going to be something I'm interested in. I'd love to see a pullback in the market and in that, and then it have blowout earnings. Sorry. Now there's pizza. It's already tested 102. We did a little bit of a retracement. We've done this a few times here, bouncing along. Will we probably go back to 102? Probably. This is probably one of the weaker ones that I've got on the long list. Excuse me. I need to wet my whistle there. I apologize. Six Flags. Nice good movement here. I'd love to see a pullback. Where? To the prior high, the breakout level around $21.75 to $22. And then come back up. It would then set us up for a potential J-hook. And as anybody's known me for a while, they know that I love my J-hooks. It comes back down into there and then starts back up. And my first target would be the prior swing high. And then I'm looking for anywhere back in here or back in here as potential targets. All right. Another one of these low dollar ones is Service Properties. It is a REIT. Overdine, it's a breakout. Could it go to $10? 1/9. It's a little over about 11 or 12%. Just a sheer stock play could be good. Could we go up to 13? Sure, but probably not in a straight line. It would be more like a zigzag. And that's what I would expect for us to go and get that high. And it would take a while. Next one on the list is US Foods. US Foods. I'm going to show you something right here. See that volume 2660? That's institutions in there. It's like elephants jumping in a pool. Anytime they get in, they can't help it but make a splash. And now we're going to see what that ripple was all about, because I think she's heading to 2650, and it's probably going to happen in the next few days, because we still have probably 3 to 5 days of upward momentum, unless the market totally craps out. And the last one on the long list is Whirlpool. It's a bit expensive at $180. It had dividends of 120 on the 27th, which contributed to a little bit of the sell-off. If we can get back up over 180 to 181, I think we're destined for higher. Let's go look at the 9 month. Well, why don't we not look at that? Why don't we go to Whirlpool? I could look at the weekly. We're probably in the weekly pulling back a little bit because we hit that $180 level. It ran into resistance and sellers from, that's January of 2018. But we broke out. They changed the colors this weekend or last week on TC 2000, and I hate it. It is gross over here. But anyway, that's the way it is. We basically did that breakout of the V bottom. And let's go look at the area chart. There was the breakout. And we're now kind of approaching this 190 area potentially. And we got as high as 213 or so. Why is Whirlpool doing a pretty decent job of rallying here? Well, a fundamental thing is that there's a lot of people out there with some money, not the people who are really hurting, but those with jobs that have allowed them to work from home. They've got some money to spend. They're with low interest rates. They're buying new properties. Now, not necessarily new, but new for them. They could be a resale. They could be a new build. If it's a resale or new build, what are they going to do? A lot of times they're going to buy new appliances. They're going to do paint to spruce up their old ones, or the new one that they bought that's not really new. XHB. It says the Home Builders ETF, but it really isn't. If you look at the components, it's more than just the home builders. Because you got things like Tempur-Pedic, Fortune Brands Home, Whirlpool, excuse me, Williams-Sonoma, JCI. They do the controls on some of the HVAC and stuff like that. So you're going to see Home Depot and Lowe's are going to be in there. So it's not just the pure home builders. All right, let's get back to the thing at hand. Let's move ourselves over to the shorts. The biggie was on Friday before the bell. Big Lots reported, and they had a very negative report here. What I'm expecting to potentially happen here, let me change the color here to red, is I'm thinking that we're going to get another move down to about the 48 level. And then we'll get maybe a bounce. I'd love to see a reversion to the mean. And then a resumption of the downtrend. And it's right in there that I would want to go short with my stop just above it. So in this case, the stop would be around 52, and I'm looking for my first target to be 48, and the next target to be somewhere around 45 or lower. All right. Earnings. Potential change of character here. CB. CB's been kind of wallowing along, but we had kind of a negative candle. But if we get anything follow below 125, I think we can go to 122. An options play could potentially do that, and we could even go lower. DDOG. DDOG did a nose down on earnings. Did a rally more than I thought was going to happen. I had it on my short watch list back here, but it never triggered. Well, I kept it on my list, and if we get below 81 or so, I think we've got a good chance of tapping 75 again. HOLX, medical devices, I believe. Gap down on Thursday. We had some people trying to buy the dip. I'm looking for a potential that move up to this 50 period moving average and it kind of go up there. I'd love to see another rise before it starts to go lower. It tapped right down to that $58 level, which is where that shelf appears over here to the left in July. And if we could get a little bit of a rally here, maybe even 64, I'd love to see. And then it roll over. So maybe a rally to here, then a rollover, and I can go short, stop above, first target in this area right in here, and the second target could be down here at 58 or could be all the way down here in the 55 to 53 range. Let's look at old Moo here. Micron Technologies. Micron did not do well in August. I was looking for about a 50% retracement. So I'm looking for a potential move to, if this is safe, can you let me call that 49? If I call that 49, we went to 43, that's 6. Half of 6 is 3. 43 to 46, we got the 50% retracement. If I can get a little bit more in here or a bounce back up and then a rollover, then I can set my stop above, looking for the first target retrace there and second target a retest of the low here. And stochastics RSI is in my favor. All right, PRSP, Perspecta. Don't know what they do. Don't really care. Bearish engulfer here on Friday. Stochastics is where I like it. We've rallied up to the old support, now becomes resistance, and our first target would be down around 20 and a quarter. I'm also going to acknowledge that this is not a lot. It's hard to find shorts out there at the moment. So this is one of them. It may not be the best one that we've gone over. Rex Nord. Don't know what they do. Frankly, don't give a darn. Was it Frankly Scarlet? I don't give a darn. Kind of. This one's rolling over, potentially to go back down and retest this $29 level. We're at only $29.68. It looks bigger than it really is. Maybe would take an options play to do it. Maybe not. Well, if you look at what Big did before that, we rallied from August the 3rd. We rallied from down here at $40 up to 56. So you could be right. It could just be a reversion to the mean. So we could be in big lots, just reverting to that mean and dip below it a little bit to scare people out and then resume the climb. Don't know. All I know is that the candle on Friday was not good. And the potential is for it to sell off some more. Sprouts Farmers Market. It's been in a downtrend. We get a little bit of a rally. Try to get up over 2450, and it looks like we're probably going to do down to retest 2330, and maybe even the lows of over here around 22 and a quarter. Again, hard to pick out some really shortable stocks at the moment. Schmuckers. Now this is one of those that I've got on a potential reversion to the mean trade, because I think it's possibly wants to come back here and retest the 115 and a half, and we're at 119 and a half now. That would give us a $4 move on a decent options play. This could be a reversion to the mean trade, and we can make in 2 or 3 days make pretty decent return. I will warn you that this is trading against the trend, so you really got to know what you're doing, and you need to have a very short trigger. So if you see it going against you, you need to step aside, because it needs to work and work right away, or it may not work at all. So we're looking for this one to come back down here right away, but if it comes back down to here and it starts to do this, you need to exit stage right. SMTC, Semtech. Huge move up. A little bit of a zigzag into earnings, and oh my goodness, it did like earnings. But they had buyers after earnings. So whoever was buying over here probably said, oh, I could get it at a bargain. Well, what they're forgetting about is the technicals. They're probably only looking at fundamentals. There's a high, there's a higher low, and there's a higher high. There is a low, and there is a lower high. So from this to this is down. And this is lower low to that one. So this is down, and this is down. So what we have going on here is the potential for some sort of reversion to the mean into the middle, and then a rollover, and at a minimum retest 57. That's kind of what I'm looking at. Potentially 56. And that's all I would want to be going. That's all I want. SRE. Nice move up after earnings. And then for some reason, it's selling off. It's energy. But I don't know. All I know is the chart's telling me we're in a downtrend. This right here, we've got the two moving averages are separated like we had back over here. Are we setting up for another move down to retest 122 and then bounce up and then go lower? Possibly. Is the 122 where we're going to bounce, and we bounce up to 126 and then we do a rollover and I go short and look for the retest of 122 again? That's what I'm looking for. So if you guys have any other shorts out there, please point them out to me. There's all kind of slim pickings there, and a lot of the stocks or the longs are also somewhat slim because we haven't had a really big pullback in the market for a few weeks now. So caution being the game to play at the moment. Make sure that you're very picky about the stocks you get in, either long or short. Well, let's go back over to our presentation. I said if you stuck around, that we would have a couple of bargain offers for you guys there. Well, the first one, could CGC, wait a second there, Ray. Why don't we look at CGC when we go over the individual ones? Does that sound like a winner? That won't count necessarily on your one stock, though. I'll give you a break on that one. Just $49 for 60 days. That's 2 months, less than 80 cents a day for either right way options or the hit and run candlesticks rooms. I have been in there. I've been in a lot of rooms since I went to went to trading, and I started trading late 90s, 97, 98, and this is by far the best group of rooms that I have ever been associated with. We don't lie, we don't hold things back. If we make a mistake, we tell you what we've made, positive and negative, wins and losses. It doesn't matter, because we're not there to try to impress you or anything. But you can use that for either the hit and run or candlesticks or right way options. And for you, those of you who might know that you might want to look at the LTA scanner. The LTA scanner is real time look at your favorite setups and patterns. Ed would be glad to go out there and help you set up your system the way so it will look for the patterns that you are most interested in. It is $147 a month normally, but there's a chance for a 14-day free trial to see if it's what you like. Every Wednesday, he has at 2 p.m. in this free trading room, he has an LTA support session. But any day during the week, between normal trading hours, 9:30 a.m. to 4 p.m. Eastern, he's in this room to answer questions and to help you along. So can't beat free. If you think you're even remotely interested in it, give it a shout. And one thing I would ask that you would do, if you're interested and you say that after your 14-day trial that you want to sign up for it, would you mind using this referral? It would help me a little bit. I get a small stipend from that, very small, and it would be I'd be gracious for all of you if you did that. But give it a shot if you're interested. If you're not, that's okay too. Free webinar we talked about at 2 p.m. And there's the scanner with the guides. And my links out there for Top Gun Trading. It's already posted. Now I'm going to copy this here. If you're interested in following me on StockTwits, you can follow along there. Later tonight and every week I will post videos to my videos. I have probably 150 to 160 videos posted from now back a few years. Almost every one of them I feel are worthwhile looking at. And this is YouTube, Top Gun Trading. So all I had to do here was type in youtube.com/Top Gun Trading, and it brings me to my homepage. And if you're interested in anything like we were talking about stochastics RSI, type that in. And anything that mentions about stochastics RSI will float to the top. If you're interested in gap trading, I've got a whole bunch of ones. Gaps are one of my favorites, and so therefore you can do that. And anything mentioning gaps, there's a bunch of 1-hour presentations. They're all free, so have at it. All right, thanks, Kimberly. Appreciate it. Let's see what we got here. All right, I'm going to open up for questions, but this is not stock specific. I want only questions that are, maybe you had a question about what my settings are on my charts, something I've said tonight. Ginger, do you typically trade the daily time frame? Yes. Let me set my settings here so I don't scroll to the bottom. Okay. All right. Do I trade the daily? I set everything up off of the daily time frame. So if I were interested in going long play, I'm going to be set up. Maybe that's not the best one. FOSL. I will look at the daily. That's where I scan everything and use during the day, during the trading day, I set my LTA scanner to help me watch for stocks during the day. At night, I will look for and refine my long and short list. So if I found this over the weekend, which I did, and I saw that it broke above 6, and I'm interested in it, I'm developing a plan. I'm developing myself a plan based on the daily, and it's based off the daily. Sometimes I will drill down to maybe an hourly chart to see what's going on inside the hourly chart. Well, FLS daily hit this $30.50. If I go to the hourly, I can look and see that, oh, there were highs over here, highs here, and highs there. So what I might want to do is line these puppies up and say, I want to make it break 30.68. Notice how we're starting a little bit of a pullback. This is great. If it pulls back a little bit and then breaks above it, I'll still monitor it and trade it on the daily. But doesn't mean I can't refine it a little bit and sharpen my pencil a little bit. But I will tell you that if I get in on the 60-minute chart, I need to trade the 60-minute chart. If I get in on the daily, I need to trade the daily and not change. Don't get in on daily and then start watching it on a 5-minute chart. That's not going to work. You will actually shake yourself out if you start doing that. You lose money. You haven't already scanner. All right, thanks a lot there, Malcolm. Johnny Mac, can you say what your percentage winning trades is? I don't. I tell people when they first start they need to have a journal, and it probably helps. And if you start running into a bad patch of trades, need to revert back to stop doing what you're doing and start journaling again. I don't journal every time, but every time I've done it, it's been anywhere between 60 to 65, 66%, 2 winners out of 3. All you really have to do if you manage it properly is win 50% of the time. So it's about 2/3. All right, Johnny Mac. Well, and one of the reasons why my percentages are high, I mean, I've hit 75 and 80% in some months. Now, again, I'm pulling that out of just kind of roughing it out. I would have 8 winners and 2 losers, or 7 and 3, because I only pick out the best. I mean, you'll find that I'm not one of these guys who's going to trade willy-nilly. If it doesn't fit my needs, I don't have to trade to earn a living. So that's the beauty of it for me. It's really an avocation and a love. I've got money that I can live off of, and a pension and Social Security and whatever. So I'm lucky in that regard. So I'm here to trade and hopefully help others. All right. With no further questions, I'm going to open it up for one and only one stock. Please identify whether you're looking long, looking short, or you are long or are short. Okay, Doll, good night. How you doing? PayPal. PayPal has been in this steady upstream. Hold on a second. I think I'm going to sneeze and I can't go mute. I fought it off for now. Yeah, this one could be a good one for a pullback. I think we're doing a little bit of a cup, and if this does a handle, that would be perfect. If this one pulls back pretty close to the tops here, what's that at? 200? Because each of these are 20. Yeah, around 200-ish. If it pulls back to 200 and then curls up, that's a winner. Now, look and see where the stochastics RSI is at. It's telling me we could do a little bit of a pullback. Hopefully it won't be as drastic as this last one. I'd like to see it pull back like this one here. Not this one. Not that one. If that's the case, you get below the volatility dot and it has more overhead resistance to fight. Frank wants to look at MIK. What do you think first thing I'm going to say about MIK, Michaels? They have earnings. September 3rd. So let's drop this off. Whoops. Come here. And one of the reasons why I like to do earnings list every week because I can remember these, or I think, I go, wasn't that on the list? And I go back and look. And I go back and I see it on this list. I know, well, I got to play for earnings or not. And if I go on to go away from TC2000, I went for Think or Swim, it'll tell me whether it was before or after the market. It's before the market opens on the 3rd. So you don't have a whole lot of days. The problem I've got here, we've been up for what? 1, 2, 3, 4, 5, 6, 7, about 8 days out of the last 10 or 11. Now, the good part about it is stochastics RSI is going down. The momentum is building for the next move, potentially. So I would definitely wait until after earnings on this one. You can do what you wish there, Mr. Frank. Lauren wants to look at ARNC long. Well, I like the fact that it's doing a potential setup for a pop out of the box. And let me change the color. And so if we can get the breakout here, that's cool. Or we could get the breakdown. That box pattern is telling us we're set up for either one. Now, TC2000 is really easy to zoom in and zoom out a little closer. There's the pop out of the box pattern. It's kind of in middle between this $30 and this $16 level, so it's kind of halfway between. It could go either way. Earnings is until the November 3rd. I just thought of something. There is a thing over here that's new called price region. And if I were to set up price region right there, let me see this one right here, take that away. I could let it automatically set a pop out of the box for me. Now, if I tried to set the price region from here, it would go all the way down to $19. Sorry, $20. So you have to really play with it. But that's kind of a little nice feature there. Rectangle, we've had for a while. 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 Last to last line is a new one. I think it's new as well. So you could draw from, say, the low and up. Help you draw maybe a trend line of some sort. And I could potentially then just Yep. Okie dokie. MT wants to look at YY long. Why? Actually, Y is probably the more. Boy, this is kind of in no man's land, you know? It probably wants to get to 100, but it got to 100 back over here. Back over here, that was probably a really nice entry. 2020 hindsight, right? Move up, pull back, move up. That right there was 60 to 75. Let's call that 15. And from there, 15 would be 85, 90. And it got up to 95. So this would be a 1 to 1.3 move. Call it 1.3. So 130% of that last move. So 130% of 15. 350 is 150, $15 plus what, 30% of that? $17, $18. So yeah. And this was one move, and this was the second move. Now, I kind of got off on a tangent. I just kind of saw it. Sorry. This is kind of in no man's land. Will it go back up here and probably hit 95 again? Probably. But right now, what I like to do on these is I like to set these up in regression channels and then play with them. And what I like to do is set a regression channel with the bottom here or the top here, and this right here, I ignore that top there because it gapped up there and closed back down inside. So I like to play the bodies and I like to play the closes. It's just the way I draw them, and I like to use the automatically drawn ones so I can't cheat as much. All right, hope that helps. Johnny Mac wants to look at GLD long. Let's draw that box. That right there. Until it gets over 190, I'm probably not interested. The other thing I'm going to look at is, whoop, come here. There we go. EMA only. We were in an uptrend. Now we're kind of settling into sidewardsville. I would wait for it to establish another uptrend, and that'll happen when we go above 190. Just that's just the way I'm looking at it. But I've talked myself out of some of the moves here. I was waiting for the pullback in gold after it did that last breakout, and it never came back to me. Gold, oil, they both work that way. They just get on a tear and never come back normally. Clorox, short. Yeah, Clorox does look like a short. That's not a bad one. I think I'm going to add that to my shorts. Let's look at it. We broke below the line of 222. We came back up, rallied up to about the old support line. And where's the next level? Probably 210. Not bad. I kind of like it there, Barry. Thank you. Target. Charles. I am going to say let's cut this off because I've got to have dinner here at some point in time. Let me go back and find it. There it is. This one's kind of tough. Let me try the line to line real quick to see if it works. Hey, where was it? There. Let's do this. And then if I do that, edit, and extend right, color, green or blue, I think you're onto something there with Mr. Target. It may have completed all its pullback. Stochastics RSI says maybe not. Maybe these guys are a little early. But another reason why we can use that line to line to help us draw the trend line, or we could draw it ourselves. Okay, Howard wants to look at TYL for a short. Well, that sure does look like a short to me, because what it has done, it moved down, flag, now it looks like it's moving to retest 330. Now, one thing I will caution is that this rising 200 will act as somewhat of a temporary pause level. I don't necessarily call it a support level, because no moving average acts as a support level. What would act as a support level would be that, and what'll happen is that it will drop over a few days and get to that 325 level. The 200 period moving average simple would move up, and people say, oh, it bounced off the 200. No, it didn't. It bounced off this level right here. They just happen to be coincidental. All right, yeah, Howard, that TYL does look like a good one. Copy to short. Thank you. Debo Y wants to look at Square to the long side. Square is running into a little bit of resistance here at 160. I would love to see a retracement to 150. And it looks like it may want to try to do that. We're wiggling ourselves lower in the stochastics RSI, but anything over about 160.50, we're in clear air. So other than these short-term tops, there's no overhead resistance. TNA long for MY. Potentially small cap. Okay, so let's look at small caps, which is the Russell, which is the IWM. And let's look at the EMA only. It wasn't a rally. It's kind of going sideways. We need to get another breakout. Let's look at the area chart. And the area chart's got a little bit of room to run. Yep, it is not necessarily the best movers. The Qs have been. Diamonds a little bit, but definitely the SPY. SPYs and Qs have led the way. Mega cap. One of the problems, and this is a fundamental thing, and I don't put a whole lot of creeps in it, but one of the problems that IWM is going to run into is that we haven't solved our problem with the COVID-19 yet. We are still refusing to acknowledge the fact that we have a problem. There are enough people here that are absolute turkeys about it, that they won't wear masks, they won't social distance, and they're going to come into contact with somebody, they're going to get it and they're going to spread it. And that's going to hurt the U.S. based companies. Russell, IWM is going to be those. The ones that are going to avoid it are the multinationals on the spiders, some of the diamonds, and some of the mega cap Qs. All right. Just telling you the way I see it. HSM array and video long already. Just looking. How much upside? Well, here's the deal. You're probably going to get a pop on NVIDIA on the 1st when they make their announcement. I'd take some money off then. You may want to decide whether you want to ride it after the announcement or not. I'd use it to see what it does. But they're going to make an announcement. They're going to have, I'm looking at it from a fundamental perspective. I'm a computer geek, nerd. My hobby is to watch YouTube videos with geeks and nerds talking about computer shit. Okay, they're going to have some really, really good cards that are going to be very hot, I mean temperature-wise, and going to be extremely expensive. I don't know how well they're going to sell, but they're right now ginning up a whole lot of interest in the cards. If they produce some cards at the price levels that I've heard bantied about, I've heard two stories. One, they're going to be $2,000 for a graphics card, $1,400, $1,600 in that range. I mean, ridiculous. But I've also heard some that they're going to have $400, $600, and $800 cards, and then a $1,400 card. I could see those as selling because people are willing to pay $400 for a graphics card that works and does really well. That's their hobby. So yeah, I've spent $400 and $500 on a graphics card myself. So yeah, it's that can happen. The other one that's going to have to keep an eye on for longer term is AMD. AMD is going to be releasing graphics cards, and if we get a pullback here, we need to get in on a leap. I sold my leaps in AMD back in here. Never got back in. When it broke over this $60 level, I should have gotten back in. But I didn't. AMD's releasing graphics cards and CPUs, central processors, the end of this year. So keep an eye on this puppy and maybe on a weekly chart and see if we get another consolidation before we get into the Thanksgiving time frame. I think both of them could be winners. You're welcome, doll. Thomas D is short Fleabay. Yeah, definitely below below 53.75-ish, 53.50. Where could it go? Maybe 51, but more than likely 48. Let's look at Fleabay. Oh dear. Can you guys still hear me? Because it looks like I've lost my internet connection maybe. Okay. Nope, I haven't lost internet. Just Thinkorswim probably went out to lunch. Yes, but Thomas, it looks like a good short. Okay, Roger wants to look at Ross Stores. 11.19. Wants to go to 97 at least. EMAs. Looks like it wants to try to curl back up. Doesn't look half bad. Kimberly says she sees a bull flag. You're welcome, John K. CWH. Yeah, it seemed to be doing a zigzag lower. Now looking for the next zag lower. Yeah. Thanks, Kevin. Jenny wants to look at Prudential. The Prude. One of the problems I've got with Prudential is lining up the highs, lining up the lows. This is in a triangle we haven't broken out yet. And then if we do break out 72 and the 200 are above us, this is what I call almost no man's land. Prudential. R-Funk, I think we covered it, GLD. GDX and GLD are about the same. I'm lining up the tops in GLD and GDX and the the bottoms, black bottoms. That's a triangle is a no man's land. We're probably going to have to break above 42 to 43. Good advice, Malcolm, about the dollar. Val, I think the reason Clorox is going lower now is that it got possibly overbought and overblown early on. I mean, let's face it. We have gone from the February lows. We went up to, Dad blasted, it dropped off. We went up $80, 51% over a 6-month period, so it's 123% annualized on stuff that's just basic. So, yeah, I mean, they've sold a lot of cleaning products, but there's a lot of competition out there now as well. I think it's zigzagging lower, and then it'll pick up the more normal pace that I say should be on. Probably a 25 to 30 degree incline. So something like that. I'm lining up these lines back here. And I think that's probably where it should be going down to. It ain't coming up. So we kind of got ahead of ourselves. Happens. JGS, are your parameters 7733 for the stochastic TSR? Yes. Standard USALA, usual, or are they different? And if so, how are the values different? I don't know what the norms are, but I think they're 14. But I use 7733. RSI period 7, stochastics period 7, percent K 3. I use simple. And percent D 3. Average simple. Hope that helps. Okay. 220/70s. That's okay. You know what? I'm going to have to call it a night, folks. I know we've got a bunch of questions. Why do I think they changed their colors, Frank? I have no idea. But I will be talking to TC2000. All right, folks. You have a good night. I'm going to render this and post it up to the YouTube channel, Top Gun Trading, probably within the hour or so. however long it takes to render and to complete. Sorry to get to all the questions, but we just ran out of time. All right, you guys take care. We will not be having a presentation webinar next week because we're looking at Labor Day. We'll have one 2 weeks from tonight. All right, take care. Be safe. Be smart.